So the account receivable ledger is how to say, like, contains the amount due from customer. Okay, whereas the accounts payable is contains the information about the amounts owed to creditors. Okay, subsidiary ledgers are a listing of individual accounts with common characteristics. Okay, so let's see the example here. We have accounts receivable ledger here. So uh, in general ledger, as we all know, a general ledger or T account, we have one table or one T account of one account, like account receivable. For example, we have, this is the general ledger, we have account receivable, and this is debit and this is credit, right? This is what we ever saw in previous chapters. But for account receivable subsidiary ledger, okay, you have one ledger for one credit customer. Okay, one account for each customer. Okay, this is the credit customer. The name is Frank Booth. The second one can be other another credit customer, and so on and so on. So in the account receivable subsidiary ledger, you will have one account or one ledger for each of credit customer. Okay, for the accounts payable subsidiary ledger as well, you're gonna have one subsidiary ledger for each of credit supplier, for example. Okay, and this is the example of, this is the sales journal, right? Sales journal. And then this is as we all know, that sales journal contains the information about credit sales. So you will see account receivable here. So in the general ledger of account receivable, you will see these details and the total, right, to 150. But in the account receivable ledger, okay, you will see more deeply about these numbers. Who owned these numbers, from who you got this account receivable. Oh, okay, you open the account receivable ledger and then you find out that this from this number there are 750 from Albert, there is 175 from Frank Booth, and there's there are $675 from Jason Henro, and so on and so on and so on. By having a account receivable ledger, you will know to whom you need to ask for the money when they meet the deadline. If you only have the general ledger of account receivable, you only know about the amounts, but you don't know to whom you need to ask for the money. So if you have the account receivable ledger here, you know that Albert Co. Have some have some loan to you, or maybe they borrow some money to you, or they buy something from you but on credit, not yet pay. So maybe next week you can go to Albert Co. and say, hey, pay your debt, something like that. Okay, so I hope that's clear. Okay, next. Okay, as I mentioned to you previously, that in the special journals, remember, we have sales journal, purchase journal, cash receipt journal, and cash disbursement journal. But anyway, if in your company you have sales tax, every sales you record always sales tax, then you might have the special journal for sales tax. I mean, you can put the sales tax information in the sales journal. Or if in your company happen sales returns and sales allowance happen regularly, okay, you can also make the special journal for sales returns and allowance. But if sales returns and allowance only happen once in a month, it means that it rarely happens, so you don't need to make a special journal for sales returns and allowance. So you just record sales returns and allowance in general journal. Okay, this is the explanation more deeply about the special journals. So we're gonna start from the cash receipt journal. Cash receipt journal. In the cash receipt journal, you need to record the information about every cash that you receive. Yeah, every cash inflows, all cash inflows you have to record here, whether the cash is from credit customer or cash from cash sales or cash from other sources. For example, you loan from bank, okay, and etc. So let's see here. So this is the cash receipt journal. You need to have date here, and then the account credited. You write the name. For example, you have the credit customers, you write the name here, or the cash is coming from bank, you write the name of the bank here. Okay, this is the explanation, and then this is just the reference, and then cash. You need to have one column here for cash, because this is about cash inflows, right? So this is a must. Okay, you have to write cash here in this column. And then the next column, you will see sales discount. Okay, sales discount. So if you always give sales discount to your customer, you need to make this column. But if you never give sales discount to your customer, so you don't need to write this column. Okay, and then next is account receivable. Okay, I think you have, when you make cash receipt journal, you have to write account receivable column here, because cash receipt, one of the sources of cash receipt can be the cash from the credit customers, right? You have to have account receivable here. Okay, and then next is sales, and then other accounts, and next is cost of goods sold, debit, and inventory on credit. Okay, remember, if your business is service business, right, do you need this one? No, service business, you do not have inventory, so you will not have cost of goods sold. If your business is service business, so this one no need. Okay, so like I mentioned, like I always taught you that in terms of the format, accounting is very strict, but it's still flexible. If you don't need this column, then you don't need to make the column, just leave it. Okay, so this is cash receipt journal, and then this cash receipt journal will be correlated to general ledger of all accounts, and of course the account receivable ledger and account receivable subsidiary ledger, I mean, to see the number of account receivable for each of credit customer, because you have account receivable here, so you will have the general ledger of account receivable and the subsidiary ledger of account receivable. Okay, next one is the purchase journal. In the purchase journal is all about purchase on credit. Okay, if you buy something on credit, you need to record in the purchase journal. Okay, so in the purchase journal, you need to have account here. Okay, from where you buy that thing. For example, you buy inventories, who is the supplier, you write here. Okay, and then date of invoice, the date, and then the terms, this you already learned about this, the terms, and this is just a reference. And then accounts payable, this is a must. In a purchase journal you have to have accounts payable, because purchase journal is for purchase on credit. You buy something, you purchase something, but you're not paid it yet, so you're gonna have accounts payable. Okay, it is a must. And then you're gonna have inventory here. Okay, but if your business is service business, meaning you do not have inventory, so you don't need to make this column. Okay, if you have a business, if you have a service business. And then you write an office supplies and other accounts. Okay, so the things that you regularly buy, you make the column here. Okay, so in this example, the company regularly buy office supplies, that's why they have the column for office supplies here. But if in your company you regularly buy office equipment, for example, then you're gonna need to have one more column here for office equipment, and then the next column will be other accounts. Okay, do not forget to write the position: debit, and then account payable, credit, inventory, debit. Okay, and then because this is purchase on credit, so it will affect the accounts payable ledger and the account payable subsidiary ledger. Okay, the next one is cash disbursement journal. In cash disbursement journal, you will record the cash outflow. Okay, if cash outflows, what is the example of cash outflows? For example, you buy something by cash, okay, or you pay salary to your workers, that's cash outflows, right? So so you record everything about cash outflows in the cash disbursement journal. Okay, so let's see the format of cash disbursement journal. You need to have a date, and then check number, and then pay, to whom you need to pay. Okay, and then you have the account debited. Okay, and then this is the account debited, the account that you need to be that need to be debited. And then you have reference, and then you have cash on credit side here. You need to have this one. It is a must, because you have to have this one, because this is about cash outflows, so you need to have cash on credit here. Okay, and then inventory here, inventory on credit. If you this is inventory on credit, but if you do not have, in your business you do not have inventory, so you don't need this one. And then other accounts, and then accounts payable. Okay, cash outflows, for example, you need to pay your debt, so you will have the table of account payable here, and this is on debit side, because when you pay your debt, right, your debt or your liabilities is decreasing, right? So when your liabilities is decreasing, liabilities is on debit side. Okay, so this cash disbursement also will affect the general ledger, and then account payable subsidiary ledger. Okay, it's simple, right? So so I would like to review a little bit. Special journals, we have 4 special journals. We have sales journal, purchase journal, cash receipt journal, and cash disbursement journal. Sales journal is for credit sales on credit. Purchase journal is for purchase on credit or credit purchase. And then we have cash receipt journal. It is all about the receiving of cash, or about cash inflows. And then the next one is cash disbursement journal. It's all about cash outflows. Okay. And then how about other transactions? Okay, so other transaction you will record in the general journal. Okay, like adjusting entries, closing entries, purchase returns and allowances, and sales returns and allowances. All of these things you will record in the general journal because they are not categorized in any special journals, right?